With nearly half of all marriages ending in divorce and over 70% of those cases, a home is involved. So what happens when one or both people want to refinance, buy a new home, or figure out what to do with your current house? Well, whether you're a buyer navigating divorce or a loan officer who wants to do better to serve this market with empathy and expertise, this video is for you. Hey y'all, I'm Ashton Mitchell, your mortgage lender, branch manager, mama 5, and someone who's passionate about building wealth through homeownership. Also someone who's been through a divorce herself. But we know life happens. Divorce is emotional, complicated, and full of financial unknowns. And if a home is involved, you better believe it gets even more complex. So in today's episode, I'm walking you through a complete guide to divorce lending. The do's, the don'ts, the misunderstood guidelines that can make it or break it, and how to make it exceptionally smooth for your process in a process that's normally not smooth. Divorce isn't a niche, it is real life. And most people going through it don't just need a mortgage lender. They need a calm, clear-headed guide. When I work with a divorcing borrower, I'm not just thinking about their rate. I'm thinking about how alimony or child support affects their approval. If they're trying to keep the marital home, whether the divorce agreement allows them to move forward, yet how to partner with their attorney to keep everyone protected. This isn't just lending, this is life strategy 101 for divorce. Here are a few guidelines that come up over and over again. Support income. To use child support or spousal support like alimony as income, they must have been receiving it consistently for at least 3 months or show that it's court ordered, and it has to be able to continue for at least 3 years. Equity buyout and refinances. Many people don't realize that you can go up to 90% loan to value on a rate term refi if it's part of a divorce buyout and it's not treated as cash out. Support payments as liabilities. If they're paying child support or spousal support, that counts in the borrower's debt ratio. So if you're paying $600 in child support, that's a $600 debt we have to count against you, even if it's not on credit. Your legal status matters. Some states, like South Carolina, require legal separation before a finalized divorce decree. That simply means that you've been separated for at least a year before the divorce happens. Now, you may not have a court order for child support or alimony during that time, but it's going to be imperative to get that to use it as income or a debt. Here's where you become more than a lender and a collaborator if you're a loan officer watching this. If a borrower is going through a divorce, I always offer to loop in their divorce attorney. Why? Because often we're all aiming for the same goal, but we're speaking totally different languages. The attorney is thinking about the legal agreement, I'm thinking about Fannie and Freddie. If we don't communicate early, we risk writing agreements that won't actually work when it comes to the mortgage translation. For example, if one spouse is staying in the home and has 2 years to refinance, well, we need it written that that spouse is fully responsible for the mortgage in order for the other spouse to be able to purchase without having that current mortgage on their debt ratio. The biggest mistake loan officers make, or borrowers who are getting divorced make, is getting involved in the mortgage process after the divorce decree is signed. It's often too late to change things that affect your approval. If I can talk to someone early, even before mediation, we can structure things so that when they're ready to buy or refinance, they're set up to win and they're protected financially. Sometimes that means telling a client they have to wait. And yes, that is hard, but it's better than letting someone think they're ready and then crushing their plans last minute. Divorce is messy. There's no doubt about it. But that doesn't mean the lending process has to be. My job is to show up with empathy, clarity, and a game plan to help someone going through one of the hardest seasons of their life make smart financial moves that support their next chapter. That means giving them timelines, expectation, and support. It also means telling the truth, even when it's not what they hoped for, because I'd rather be honest and helpful than fast and forgettable. If you're a home buyer navigating divorce or a real estate agent with a divorced client, a lender looking to serve this niche better, I'd love to connect. Or if you're a local divorce attorney who needs a great referral partner, I'm happy to be your girl. Call me or text me at 843-998-5045, and I'm always right around the corner, happy to help. Don't let confusion or assumptions cost you time, money, or peace of mind. Let's do it together as a team with heart, hustle, and high standards. Like and subscribe for more mortgage education and real talk about real life scenarios that impact your financial future. Turn on your notifications so you don't miss my next video, and drop a comment if you want part 2 or have a specific divorce lending question.